For the Pulver report. Let's kick things off with the charts. Let's get right into it. So the SPY, we're sitting here pre-market 478.54. It's up about $2 from yesterday's close, pushing up on those highs once again. We have currency strength chart going on right now. Not super aggressive on the vertical axis, but Aussie making a little recovery. Pound is weak. Swiss is at the bottom again, which is not too bad. Yesterday's currency strength, Aussie on top, Swiss on the bottom. This was a good sign. I had a nice little fluctuation of my Swiss pairs, pushing up for some. And going back to today, CAD, Swiss should still be pushing a little bit higher. Let me check and see. I got some scalps running right now. Got some swings running right now. Let me log in and see what that looks like. And market watch, go to the futures. Futures is way up. Well, at least on the morning, elevated, pretty nice little rally since midnight. 0.52 on the Dow Jones futures, 0.45 in the S&P futures, NASDAQ 0.65, making a little recovery. We didn't really have much of a dip or pullback anyway. I think when I was talking about it this week on Monday or Wednesday, I just drew out structure like this. Let me get my drawing tool up here. There we go. Something along these lines where we have a little bit of that structure on the SPY. So today's open looks to be right about here. I would be watching the short term because if that gets faded once again, then it's just going to be a noisy situation until we have the Fed on the 31st. We also have more earnings coming out in the next couple weeks. Let me get into my trades here. I think I got some trades going okay. Yep. So let's see here. Aussie Swiss. I've got Aussie Swiss up 34 pips on a scalp. CAD Swiss up 63 pips. It's coming into some profit this morning. Ooh, it's got to be close. Where's profit target? Come on, CAD Swiss. You do it. You can get there. I think because it's Friday, I'm just going to take the profit. I'm about 20 pips away from profit. I'm going to close it. Let's see here. 62 pips of profit on CAD Swiss. I'm going to close it. Okay. So 62.5. Yeah, I'll close that bad boy. And that's it. So let me grab a little update here. CAD Swiss, that is no longer, that's a win. Just doing a little update. We'll get into the SPY, the DIA, the Qs, dollar, oil, gold, silver, all the goodies right there. Okay, let's go DIA. This one had a little recovery yesterday as well, which directionally I don't love because I do have this one positioned out for a little bit of a correction going down to some pivots. It just turned right at equal lows. And same type of thing. We might head up to the highs again and just be chop suey for the next week or two. Um, heavier earnings reports the next couple weeks. I think it's 222 next week, and then 1,000 the week after, coming into the Fed on the 31st. So earnings season could break this loose. We had a couple trades in stocks and options. Alcoa is down to some fresh lows. I'm going to check and see. I've got a slight long strangle still going. Opening bell. I'll check that out. See if that's in profit. And then TSM, the one that could, look at that. Oof. This is an earnings play that we looked at this week. I had mentioned this in a video that I did for 8cap. I mentioned this in the trading room this week for equities on demand. Two ways to play this. One was basically there are two long trades on options. If you bought the 101 call and you bought the 100 put, it's a slight strangle. It's a long strangle, but it was 455. And yesterday we looked at this and it was trading for $9 and change. So it's even higher than that based on yesterday's close. So in the market closed yesterday at 113. That gives you, $12 to $13 of value just on the call side. So shucks, because I was anticipating at least a 475 move or a $6 move, and it blew that out. So this thing ended up going for the week. We look at the weekly time frame. You're going to see the candles much, much, much larger. So this is what's nice about some earnings plays is, candle started out around $100. That's where we were taking our positions. It was essentially at the money, $100, and we're sitting here at 113. I was expecting a 475 to $6 move, and it doubled that. So lots of earnings potential there, or lots of profit potential there. I didn't take the trade because it didn't price out that way. I had the trade that would have been ideal. I didn't necessarily want to pay the 455 debit, so the 105 by 97 long strangle for $2. That would have been a great trade yesterday. That was trading again 105. We're up to 113. That's trading at $8. So you pay 2, you get 8, you walk away with 6. That's a 300% return. Missed it. It just didn't price out the right way. Whatever. It's in hindsight. So I didn't take the trade. I certainly wish that I did, but it is what it is. So that's that. But the nice thing is this was one of 58 companies reporting earnings this week. There's going to be plenty more ahead. We have Netflix and Tesla coming up. We've got some bigger plays. I think the consensus for this week is that overall earnings have been decent. There really hasn't been tons of talk out of the World Economic Forum in Davos. From what I've seen, the market's just kind of stayed in rhythm and somewhat choppy, not pushing to crazy highs or anything. So if the highs get faded today, we're still in ranges. If the highs get broken today, I'm talking about the major U.S. indices. If the highs get broken today, then the market just continues to melt up. That's it. Okay. So currency strength chart again. We have some risk on flows a little bit. We'll see if this Aussie gets a little bit stronger. Pairs to watch really would be watch the dollar, watch the Swiss. If the dollar's weak and the Swiss is weak, risk on flows. I'm not even considering the yen. The yen does its own thing right now. Okay. DXY. Dollar index. Also, really quickly, let me check. I have a couple of iron condor spreads going into the next week. Alcoa, Apple is coming in to fill that gap. Amazon and Costco. And I'm looking to see if next week. All right. So as long as Costco doesn't break 700 or break below 670, I've got some, like I said, iron condor straddles on those. Just some ways to make some money if the market's a little quiet. Worst case is market doesn't stay quiet. We rip. This will help the overall portfolio, but I'll have to make some adjustments on those either iron condor spreads, or I'll take it'll probably be break even or so. But if it stays sideways, then I'll generate a couple bucks of income next week. All right, let's do dollar. Dollar index. Here's the daily chart. 3 indecision candles. Let me log into YouTube and say good morning to everybody. Should all know the deal by now, right? Yes. There we go. Chris, good morning. Trish, good morning. Ruthann, good morning. Debbie, Gary, what's happening? Larry, FK, and Jacob, Janza. When do you expect the Aussie Swiss is going to pull back? I don't know. It's pulling back right now, isn't it? Are you want to pull back to what? You want to pull back to buy it, or you want this? Like I'm long, man. I hope you are too. We wanted to get long at support. We have nice 200 EMA that I think is still going to get hit. I can show you on another chart. I have been vocal about this setup. I took the trade this week in the flex room actually. So here's my flex doc, and here is my chart. I just put in a trade this week as a non-FIFO. So I went long this week on the Aussie Swiss. It's right here in the trading room for 2024 trade log. Grabbed a 56.90 and it's trading at 57.25, so it's up 35 pips. Where's my target? This red line is a 200 EMA. That's an exponential moving average on the daily time frame. We've stretched out over 250 bars. A lot of times, 200 plus bars on a daily time frame is a good rule of thumb to have the market come back and kind of test it. So off of these major lows, couple things, right? I mean, either this holds, which is pretty solid support, and makes its way up to the 200 EMA, and I grab some profit there. But ideally, I'm holding out for that little line right there, which is a yearly pivot at 59.50. I think I put it at 59.60. So I'm going after target one, target two. If you want to take this down to smaller time frames, I mean, this isn't a pair that just goes, 100 pips a day. This is a slow mover, right? And there's no guarantee that this is the bottom. I mean, this might be looking good for 2 days and then stall, right? Maybe it's a bull flag, and then you have another push to the upside of that 200 EMA. Maybe it pulls back a little bit more, and we test these lows, and maybe it goes a little bit lower and test the backside of the trend line before it goes back up. So, to the question, when is it going to pull back? I don't know what direction you want to pull back to be. Because it's been in a downtrend, is that the pullback you want? Because what I'm looking for me is this downtrend is done. I'm looking for this thing to go up way more than just the 200, just the day, the yearly pivot. I'm literally looking for this thing carves out a low. I'm looking to see where 5 waves is. So is this, wave 1, 2, 3, 4, 5, or is all this support here? And this is wave 1, 2, 3, 4, 5. I don't know, but I'm long, period. And I'm going to enjoy some positive swap. CAD Swiss, this one's been doing really well the last 4 or 5 days in a row, pushing the upside, going after the yearly pivot, which is at 65.40. That's another 100 higher. And the New Zealand Swiss took a stab at that one as well. 200 EMA, the bar count's pretty high. This one sets up very similar to the Aussie Swiss right here. Last time we touched this 200 EMA, I think it was around the same bar count. So from that level there, we're sitting around 251 bars. So it's almost identical. I like to trade up to the 200 EMA and the yearly pivot. Current price, that is around 133 pips to get to the 200 exponential moving average. And it's about 200 pips to the yearly pivot. So that is why I took some non-FIFO trades. Buy, buy, buy. In sync style. Bah, bah, bah. Okay, that's where I'm going. So I like the trades. I'm going to let them run. Morning, Denise. Morning, Donna. Nice to see everybody. Happy Friday. Happy Friday. Let me check and see. So I grabbed 63 pips on CAD Swiss. I'm going to look and see how the robots did this week. Let me go to Perfect Storm. Perfect Storm Pro closing out for 114 pips. Always steady. Perfect Storm. Perfect Storm OG, the original, 203 this week. And pockets. Ooh, 120. I saw the wrong number. I saw this month is 765, which is not bad. Not bad at all. So 120 this week. All right, let me get that up here. So it's going to be, I was tracking my auto trades from last week or from last year. So copy that, throw that in for a trade like here. And let me repeat those numbers. So Pockets Pattern Pro was 120. Let's add this into the doc. Pockets Pattern Pro 120. Perfect Storm Original 203. 203. And the other one I think was 146, 114. I was way off. 114. And I'll check that later. That total is not 950. So that'll be a little update here. 114 plus 203 plus 120, 437. Boom shakalaka. That's it. Okay. So some crosses there. Go back to the dollar index. Some hesitation. The switcheroo on the dollar is risk on versus risk off. So if we have, well, it coming into FOMC, I mean, it makes sense. Just think about this. It's 2 weeks out, right? So Wednesday the 31st, if the dollar's sitting right here in the middle, that makes perfect sense to where the dollar is going to be coming into an FOMC meeting. Nothing is expected to change, but the language, the narrative, the commentary, the press conference, the Q&A, Powell is setting the stage for, is the Fed going to be on this crazy aggressive cut cycle where they go, 6 rate decisions and they cut rate 6 times, 25 basis points each? We're at 5.25, 5.5 right now for interest rates for the U.S. Do they cut it back to 350? They cut it back to 3.75. That's what the market's anticipating. That's what fueled the huge rally in November, December last year. So if we're at the halfway point coming into FOMC, either it's going to be a huge indecision day or week because it's just noise and volatility, which I still think translates into currency pairs and in markets. I mean, we're going to have hopefully a decent chunk of movement from the high of the week and the low of the week. But if it's an indecision candle, then we look to see where the next breakout is. Breakout there for dollar strength and risk off flows. Dollar there for risk on. But dollar weakness would be risk on. So you'd see a stronger Aussie, stronger, New Zealand dollar, CAD probably, pound, euro as well. Dollar yen, own thing. Probably not trading the yen. But we'll be right in the middle, which makes some sense. Okay. So that's what I am anticipating for the dollar to be, is like just right smack dab in the middle. And if it is, makes sense. High volatility, noisy. FOMC is typically a very noisy day anyway. 2 p.m. news, 2:30 press conference, closing bell at 4 p.m. Eastern time for the equities market, and then currencies just keep rolling through. But you get a couple hours of noise and volatility, and then look to see if there's any flow afterwards. Okay, dollar, oil at 74, off the lows at 70, just below 71. I would still like to see if oil can just hit my chart alarm, man. One of these chart alarms would be great. I want to tap one of these chart alarms to get long on oil. I will be disappointed if we're just going this way and all of a sudden oil starts creeping up here and doesn't really look back. I might I might still take a trade, but USO is the symbol that I'd be trading. It's just not the same. It's not close to these lows. I'm trying to do the 60 by 59 to see if that gets filled. I'm hoping this is what we have. I hope we just have another setup here where oil is sideways and then pushes down one more time. We push down again, start holding these levels, then yes, I'm going to start looking to get involved with some buy trades on oil. Gold and silver. Gold's at 2033. That's a tough decision. I told traders if we have a break, looking for a pause. Doesn't look like we have a pause. It looks like we had a test of the trend line, and I don't know if that's technically a piercing line, where price pushes up and it just kind of, I don't know, it kind of refutes the move that we saw to the downside. So I would hold off on a directional play. Um, if it's going to be long, then gold just has some work to do, but you'd have a tight stop loss and you try to get back to the highs. So I could see that trade. But two things: if gold, if I put a chart alarm down here at the low and gold breaks that, I want to be short gold. To the opposite of that, it's like, well, if I took a buy trade, stop loss here, it goes back to the highs. There is a trade there that I could justify taking. I would just take a small trade size because it's probably a 50-50 chance, which I don't love that percentage. Like to think that it's a little bit more probable. Silver, come on, silver, and get your crap together. Um, Silver, I want to buy more at $18 and change, down here to this major support we had in August of 2022, or let's get a big surge to the upside above 26, and from 26 to 30, I would be very aggressive. 26 to 30 aggressive because I think that also stretches and goes to 35. So I would love to pick up a $9 move on silver. $9 out of a 20, let's say it broke 26. 9 out of 26, that's a 34% move. Sign me up. I try to make safely, but I try to make a ton of profit if I can make that move. Otherwise, I'll just accumulate more down here in the 18s. All right, all right. Any particular symbols you want to take a look at in the forex market? We're long the pound New Zealand still. Still, I'm holding on to it. We're up. We're up some decent pips. My phone's right here. Let me check the old platform. Positions. So Euro New Zealand's up 195 pips. Pound New Zealand's up 270 pips. Dollar Swiss. Ooh, dollar Swiss is behaving nicely. Um, I'm up 167 pips on a bunch of positions, like 7 positions. So I've got a nice little chunk of profit running on the dollar Swiss. It's about freaking time. And then also pound Swiss, I'm long, and that's starting to show some profit as well. So dollar Swiss. Oh yeah, we've got 1, 2, 3, 4. We've had 5 pretty decent days on the dollar Swiss to the upside, and we're off those lows by about 370 pips. So I am enjoying some of that movement. Any FX pair requests? Any ETFs? Stocks? Tickers? I'm just typing that in the chat. So throw it out there if you want. You can also, let me jump into Discord too. So let's jump into Discord. So a couple ways to chat during these live sessions. You can do it on YouTube. Log in. Come on, man. Are you? Oh, fudge. What's my login? Oh, there we go. I'm already in, man. YouTube. Okay. Live session is underway. Chat here or on. Okay, so we want Q&A. Got it open for Discord, or just throw it in the chat for YouTube. Okie dokie. Okay, dollar CAD coming off those lows. We're good on that. We had a trade from 32 to 34. Dollar Swiss moving really nicely in our favor. Dollar yen. What's up with that pound yen? Ooh, it's going to be close. We took trade in the pound yen. I've got a stop loss right up here, just slightly higher. It's being tested. We're going to see if this level holds and heads back down. I just saw this structure, and it was an anticipated move. I mean, if we were hesitating here, I'm like, ooh, that looks like a nice little, head and shoulders pattern. Left shoulder, head to neckline, right shoulder. So I took a stab at it. Stop loss above the high, and it came all the way back to the highs. Now there is a chance that this trade is still valid, doesn't get stopped out, comes all the way back down. If that is the case, that could be a double top. And if we get back to this level, that's target 1. But if we double that move, that's target 2. So it's either going to work or we're going to get stopped out. If this works, awesome. Obviously, I want it to work. But if it gets stopped out, I traded a one micro lot trade. So this would cost me maybe 20 or 30 bucks. I'm not going to lose money on the end crosses. I will lose pips maybe if I'm wrong, but I'm not going to lose money. Not a lot. Okay. Alcoa. Yep. Let's take a look at that, Chris. So Alcoa is trading at 26.75 in the close yesterday. So initially, if you took this trade, I mean, I don't think I'm going to see fills here for another 3 minutes. But if we look at the let's see here, bull put spread. That's not right. Let me see what I have in equities on demand. I know we did two trades, and we took profit on Tuesday before the earnings came out on Wednesday. They were right here. Alcoa, there was a 29 by 29 straddle for 269, and let's see what the low was. The low was 26, so that would give you $3. That would give you at least $3 of value. The expiration was out to the 26th. So you at least had $3, and that actually is better than what I closed it out for. I closed it out for $2 in this. I mean, that chart alarm is right there at 26. So I closed it out for 293 on Tuesday, which again, I'm not really crazy excited about the profit. I just thought it was okay. We took two trades, we're up, 60 cents or so. I was just going to take the profit. It was like an 18% profit on the position overall. So between both debits taking the profit, it was, um, I'll take my 18%. There's a couple profit targets I look at. If I can get to 10% really quickly, if I can get to 25%, pretty easily, and then from there it's like then I'm going to hold out longer for that like 50% take profit level. Like TSM in that case, I mean, we looked at TSM. That trade would have been a 200 to 300% profit, and that's just because it had a much bigger move to the upside. I mean, it was again, earnings are all about surprises and gaps and big moves, and TSM delivered. So speaking of that, I'm curious, Nvidia, how much higher are you? A little bit higher, a little bit higher. So for Alcoa, as it is sitting here at 26.83 coming into the market, I realistically need it to go. It'd be easier for Alcoa for me to go a little bit lower. If it goes a little bit lower, then I just have my long put side that's going to be profitable. I think I did. Let me see what I did in my Tasty account. Tasty login, actually. Yeah, that's fine. I'll go to the web platform. And opening bell's coming at you in 5 seconds. Okay, trading. There we go. So positions. Let's see. Yeah, I'm upside down about 40 cents on that. Let me see if I can find the legs on that. Show it. Otherwise, I'll log into the platform. History, research. All right, I did like a 31 by 27.50. It was just a 25.30 delta strangle. So I'm going to let up the expirations next week. So I'm going out to the 26th. I'm going to give it a little bit more time. If we're going to go further lower, that would help my position since we're close to the lows right now. I'm going to see if Alcoa pushes a little bit lower. Coin, okay, take a look. Coinbase, big honking pullback on these. Is it a surprise we talked about this the ETF, speculative launch, or how many get approved? Are they going to get approved? Look at all these big fat pullbacks. Daily time frame for Coinbase. Look at this thing. This thing has ripped backwards about 34.5% since the ETF launch. So all that goodness was the market's anticipation. Now, the good thing is I'm just going to look at Bitcoin because we're finally getting the pullback that I said technically was due. We had the structure right in here. We were overbought in many capacities, like the daily chart, the 8-hour chart. We've got pivots galore. We've got Fibonacci levels. I'm looking at pullback from this low to this high. So yeah, I'd like to see this thing pull back a little bit more. And it, it's look, it's just a shakeout in my opinion. Get everyone that's all excited for this big run in Bitcoin. It's like, oh, the ETF's coming. It's gonna go to the moon. Nope. Technicals win, so there's pullbacks coming, and I kind of like it because that means there's still an opportunity to, buy lower. There's an opportunity to get this thing back to some decent levels, equilibrium wise, like 38,500. That yearly pivot is sitting around 34,500. So I'm still looking to buy a dip. If this is just a 1, 2, 3 wave move, great. I want to start scooping up some more in here. And that might be my last, order for a while unless we break the highs. Uh, Obviously, want to lower my cost base as much as possible. But if I can add here, my cost base is down at like 18,000 dollars. I started my cost basis on Bitcoin originally was like 3,500. So it's fluctuated just because we've had huge runs in it. So I'm just looking at more. What levels do I want to buy from? If I buy some more here and I buy some more here, and then we're heading up towards 68,000 or heading up to 100K. Okay. I mean, there's good gains on that, right? This is, 2.5x right here. If we hit 100K, this is 2x here. If we hit 100K, I take those returns. Anytime you can look at a, 100% upside or more, I think that trade is worth it. So anyway, Coinbase, among others, pullbacks are happening. So the nice thing is technically we pulled back to this pivot. Um, One thing I could look at for Coinbase would be we started at these lows, maybe something along those lines. I mean, because this is attached to the holdings, I mean, maybe Coinbase loses a little bit of luster because now you have less Coinbase wallets. Now you have people that are just like, oh, I'll use my Fidelity account. I'll own some Bitcoin. You're not going to own Bitcoin. You don't own Bitcoin. You're buying into the spot price, right? You're buying into the layered instrument that is, it's going to follow and track Bitcoin to some capacity. Let me see if I still have that screenshot for those approved ETFs. Did I share this in Discord somewhere? I hope I did. What's the original Flex Telegram? Really, dude? I've got people freaking making my trading rooms fake now. God. It's right here. It's just called Flex Trading Room. That's the original. That's the official one. Ugh. I mean, look, I appreciate you reporting scammers and stuff. It's so stinking frustrating. Again, I can't emphasize this enough. If you ever get a message out there that somebody is claiming to be me, here's the first telltale sign. How's your trading? Let me talk to you about crypto. Join my blah, blah, blah. I mean, number one, I'm never soliciting. Okay. I have I have ways to find me, and you can come and find me. You can message me. I will reply. But I'm never probing and soliciting and dumping all these messages out there to like try to grab people. It's like you will find me on YouTube and subscribe. That's the real way to find me, right? So please, this is what I hate about this, arena. It's like I do this because I want to give back to a trading community, and what happens? Just scammers galore. So I'm sorry that happens, but please, 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 just use some common sense. Don't engage or just smoke those turds out. Yep, there you go. So, instantly offer me a crypto deal. That's exactly what I'm talking about. Number one, the room was probably spelled weird. My name's spelled weird. There's something off with it. And as soon as it's like an offer, don't freaking do that. Right? This is just, we're here to trade. We're here to learn. We're here to trade together. Nothing about solicitation. That's ridiculous. And certainly me engaging and initiating is never going to happen. So keep reporting them. Thank you. But yeah, Flex Trading Room is the official Telegram. I don't know why I said it like that. It sounded very European. Telegram. Anyway, all right, Keith, let's take a look at those currencies for you, dude. So Aussie dollar, Aussie dollar. We could have, so again, it's going to be based on the dollar index. And I think dollar index is going to be a 50-50. So dollar index was uh, heading higher to kick off the year. We had that seasonal low to start the new year, and we had high to low and a little bit of a flag pattern right there to trade the Aussie dollar. So the trade that was making traders money this was short Aussie dollar, but I said it in the flex room as this was pushing lower. I mean, this dropped from 67 to 65. That's a 200 pip move. It already made a nice little push where, traders that didn't short this resistance level had a chance to trade this little flag and make 200 pips or so. But I was saying be break even or better. Move your stop losses, trap your profits, just in case this is kind of a stopping point in the dollar pause. So right now, here's what I would look for. If we have another push, another pause, if there's another break to the downside, that would be my trade on the Aussie dollar. I would look for another push lower with confirmation and a pretty tight stop loss if we have a bit of a flag pattern. Okay. Otherwise, this is the range trade that I'm looking at where maybe we're in the middle. And if I look at the DXY, we're in the middle. So that being said, there's going to have to be some noise that has to shake out before I want to take a trade. I like buying the Aussie dollar down here. I'll put this in blue. I would like to buy it down here, and I'd like to sell it up here. Okay, so buying it down here, selling it up here, and in the middle, I'm going to stay out of it. I don't love it right now because directionally, if I can't pick a probable direction on the DXY and the index, it's going to be tough to grab an individual currency. Just my thoughts. Okay. Leveraged Income Academy, Euro Aussie. Euro Aussie. This one didn't set up as well. We were long pound Aussie and took profit. We're long pound New Zealand. It's still running. We're long Euro New Zealand still running. Euro Aussie just didn't look as clean, but it did make a nice little run to the upside. This is probably one I think there's more upside. I think that you have this low, you have this high. If we have a clean, trend line break, let me draw this a little bit better. If we have a clean, push and pause, look for a trend line break, look for confirmation. Master Flex and indicators that I have in some of my systems are great for this. More confirmation, take a stab at that right there. Stop loss below, go after this high, go after this high. That's the trade I'm looking for, right? If all this is doing is this as well, this is also good structure. If we break higher, I like that trade right there. If all of a sudden it starts to turn sharply to the downside, then there could be a channel. I haven't seen that trade yet. I'm not looking to go short necessarily. I'm favoring the long side, but I want to see some confirmation. Does that make sense? So the buy trade would be in here. I want to see a pullback first. Okay. I want to see some confirmation above that. Once I get in that trade, or if I get in that trade, stop loss below and then go after the highs. So I can get some, profits that are bigger to the upside than my stop. Okay. All right. Good stuff. Thanks for those questions. Any other currencies you'd like me to take a look at? We looked at Alcoa. Good question on that one. I've got Alcoa out to next week. I've got some. It's 9:40, so we got opening bell underway. Let's see what the market's doing here. 477. So we gapped higher. I realistically, I think with a earnings week that's coming out to kind of open things up in the next 2 weeks, and the Fed on the 31st, I think we're doing this. I think we're gonna have that at the top for right now. So today's gap open could be getting faded. Price comes right back into this area, and we're coming into just a bunch of chop and a bunch of noise that the Fed's gonna have to break loose. So from the 29th, through the 9th, I'm looking for some decent volatility and movement up or down. I don't care which direction. I truly don't. But I'm looking for some volatility in these major indices. So I'm looking to trade. Let me see what the IWM is at actually. I took a small loss in the IWM for $40. Yesterday it would have been down like $1.20. So I took a 40 some cent loss. It could have been down $1.20. So I saved a little bit on the risk there. Still finished like $2.30 some cents in profit on the DIA and or the Qs and the SPY from last week. So not too shabby. But IWM I'm watching. I put in a bull put spread 187 by 185 down here in those lows. I want to see if this can hold. If I am wrong and this heads down here, okay, then I'll do a bear call spread and I'll start positioning for major support at 163 again. But if it holds where we have holiday rally and we have a pullback, I'm looking to see if that can put in, a higher low and actually rally above. What's nice is this above, 205 is pretty darn bullish on a much needed breakout and possibly a big catch up trade where the small caps catch up and outperform the remainder of the market, which could make things pretty interesting. Earnings play is going to be positive. I think the Fed's note and commentary is going to have to be dovish because small cap, tech, money in general, it's going to have to get cheaper. If money is expensive and you're not making profits as a publicly traded company, I just think that the standard for investments is a little bit tougher now. You can't have a runway of like, I have this tool, the service, Simply Wall Street. One thing that we look for a lot when we're doing these scans is if I do, I'm trying to think here. I could probably just do Snapchat. There's a ton of other ones, but let me see here. SKLZ. Come on, scanner. Must be snoozing. The bull mascot hasn't awoken yet. Anyway, when it does this little snowflake analysis, it sometimes will just straight up say the risk in this trade is unprofitable, not due to be profitable for 2 years, 3 years. That is like automatically a no for me right now. If I don't see cash, lower debt, leverage for a company and runway for cash and for earnings, it's just something I'm not interested in because the market is so penal right now. It's punishing stocks that are not making money. I don't know why this isn't working. There it is. Crikey. This is perfect. This is perfect. Look at this. Currently unprofitable and not forecasted to become profitable over the next 3 years. That right there is a huge red flag, and I don't think it's a stock that I want to own. I don't think it's a stock that I want to trade, right? Especially in a bullish direction. So if I see that as we walk through some of these stocks and scan, we've got all these options coming out on earnings. All this stuff matters. I just think that, like I said, the due diligence, the baseline investor is looking for. I want something safe. I want something that's advantaged, right? Like I mean, and again, I go back to like, does everybody just want the Mag 7 in 2024? Is it all Mag 7 again? Is it all AI stock? If it like, here's the deal: Mag 7, the enormous 8, whatever the hell they're called, um, they're they were great in 2023. I don't think they have enough to drag the entire market with it again. Um, but in a way, they might, and this might be ridiculous. But think about the $5.5 to $6 trillion of money market instruments that are now coming out, anticipating lower savings percentages, and then going back into the stock market. If there's any more participation in the equities market, so the 60/40 portfolio, for example, where it's a split, right? It's designed to be the bond market comes back in a big way. Like the bond market was very close to a 3-year drawdown, and that huge rally we saw in that U-turn we saw in October, November, December, basically saved the bond market. So we avoided that 3-year drawdown. The 60/40 portfolio is meant to kind of quiet some of the volatility and have something that offsets. They were basically positively correlated where stocks were down and bonds were down, and then they both became positively correlated when stocks are up and bonds are up. So my point is, there's a lot of money that's out there that's coming back in to participate in some way. There, I mean, bonds is not a bad play. So if you're a fixed income person that's been trading money market instruments for 5.5%, your bond market might be that and more. Your bond market might be that 4.5 to 5.5% right now. Lower taxes, lower risk, and possibly some more upside because we've been in that massive drawdown, right? So Tesla, Trish, yeah. Tesla has earnings next week, I believe. Tesla. It was trading at 210. Now it's at 212. I think this would be a good one to look at for next week. It's going to be, I would think, pretty harsh, good or bad. I think this is going to be a volatile play. So I'm going to try to, limit the cost of any type of options trade that I do here, any type of earnings play I do on Tesla. But we have earnings on the 24th after market, which is next week on Wednesday. So I would like to see some Tesla volatility. I'd love to see it tap that level there, and just give me some, big push to the downside or big push to the upside. Let's get a big old gap, but that's coming in next week. So for option trading, I'll be active on Netflix next week and Tesla, because those both tend to have some decent fireworks. So in fact, as we come into earnings, if maybe I look at a couple of debit spreads today in class. I'll start class and equities on demand in 13 minutes. I might look at a couple of debit spreads where we can kind of get the process started now. Maybe we get one side to pay out more than the other. But if I'm going to do it, I might as well come into some type of neutral position going into earnings next week. It's always a delicate balance of, do I want to pay now for time? And the answer is no. I don't really want to pay for that time. Coming into next week, I could do like a neutral, like come in Monday, we got earnings on Wednesday, see how much it costs me. But like Netflix is a, $500 stock and Tesla's a $200 stock. A long option is going to be a little bit more expensive. So a debit spread might not be too bad to, cap your upside, but give yourself, asymmetry gains where I could max risk would be, $2, but my max gain is $8 or $10. The stocks definitely have that type of capacity for movement. Okay. Let's see here. Catching a piece of the inertia of the zigzag. All right. John's talking quantum trading there. You need at least 100K to make money. I mean, if you want to feel like you're, actually generating some type of, you know, salary. I mean, if you have 100K and you can turn an account for 20, 30, 40%, I mean, that's a nice little bonus. Um, you don't need 100 grand. I mean, I've traded options accounts at 10, 15, $20,000. I traded Forex accounts at five and $10,000. I trade a lot of them at this point. I mean, I've got robots that are all 10 and $20,000 accounts. I've got master accounts at 50,000 and 100,000. I've got, client accounts in hundreds of thousands. So it's, there's it's just a game, man. I mean, just play the game, trade your currencies, trade your futures, trade your equities, trade your ETFs, and just do the best you can. But it is risk management, right? You protect the downside, the upside comes naturally. Protect the downside. Crazy at the open sideways. It's not a surprise. So the Q's gapped actually higher. We've had another like 2 or 3 day push. We gapped up. I wouldn't be surprised if we get a gap fill. Looking at the Q's, they were doing pretty well this week, and gap to fill, possibly a gap to fill as well. So I could see this. That's a little broader than I thought, but yeah, I could see some gap fills coming back into next week. Like I said, same thing. Earnings has been slow as far as the number of companies. It starts to pick up next week and the week after. The Fed's on the 31st. So that's really the catalyst, the combination of things I'm looking for volatility to increase. So here's an example, by the way. If I had a 119 expiration, if I did the 406 by 395, which we did this last week, we closed out for some profit for like $1 and change. Right now, that trade is up $8. So a 425 debit that's trading for $8 right now. Guess what? That's 100% gain. Yay. Yep. You said hold it longer. So the good thing is it's volatility. I could have made money if this went down. I could have made money if this went up. So we did get some shifting there. Okay, couple of things to wrap things up. I've got 10 minutes. We've been in the session pretty long, about 51 minutes. I will wrap things up here. A couple things on the YouTube channel. So I am thinking of adding. So I'm going to do my. I'll probably get a video out next week for a Trader's Path to 100% update. It'll be on that playlist, just talking about my accounts, where things are at, how I'm looking at positioning. Um, and I'm going to start a strategy talk playlist as well, which is just showcasing one of the strategies, talking about one of the strategies, talking about some of the software that I use. I mean, just have a lot out there, right? It's like I'm using charts and options platforms and dashboards and all sorts of indicators and systems. So just want to share and show. And if you're interested, you can ask questions. I had a couple inquiries, emails coming in for some from private lessons. I have that in my Discord channel, so if you want to check it out, it's just under the thread for private instruction. There is a 1 hour workshop. There's an 8 hour workshop. I've had groups where a group of 10 traders get together. Uh, Take me on for 8 hours, and it's been easier for me to do that over weekends. So if that works and that sounds like something you're interested in, a group of 5, group of 10, we just set up a big call and screen share, record everything, answer a bunch of questions, but whatever I can do to help. So there's private instruction options, join the Discord group, all that stuff's free chat. Just make sure it's me, right? Anybody that's like, I'll say this again since it came up today. If it sounds fishy, why is Chris offering me something? It's not me. Okay. You can find me. You can reach out to me. I will reply. But all of my handles, I try to keep as consistent as possible at real Chris Pulver. That's my server or my Discord server is Chris Pulver Trading. My handle and avatar is real Chris Pulver. Everything on TikTok, on Instagram, which I don't even use those platforms. I just post my content because if it sticks and it generates followers for YouTube, that's why it's there. Right. So that's that. Okay. I'll let you go for today. Happy Friday. Equities on Demand students to see you in about. Um, can we do? That will be fine. I'll take. We'll just do the class. I was gonna say I didn't get a chance to take the dog out this morning, so but we'll be fine. I'll take him out. We might just have like a 30 to 40 minute session, and then we'll go from there. Okay. But we'll be back on Monday. Monday is going to be the 23rd, 22nd. 22nd, 9 a.m. Eastern time to kick it off here on YouTube and other streaming areas. And then we'll have a full week of trading going into that Fed meeting on the 31st. DeVos wraps up here. Market seems to like what it's hearing, I guess. But we'll see if it's going to keep melting up. Maybe, I mean, the SPY hasn't broken the highs yet. Hasn't broken the highs yet. So that's the next milestone is does the S&P 500 tap the highs and fade from there, or do we fade first, accumulate more, then break the highs? That's what we're going to find out. Okay. All right, buddy. Thanks for tuning in today. We'll be back on Monday at 9 a.m. Eastern time. Okie dokie. Happy trading, lots of profits, everybody. I'll talk to you all soon. Thanks. Bye.